is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome, I'm Steve Rhodes, and welcome to the Trader's Edge, folks. Thanks so much for joining me. I am absolutely grateful for your presence today, and hopefully it is Fabulous Friday. And on Fabulous Friday, you know what we do around here, folks? We start off with a cup of coffee of Tiger Butter Brew. Actually, I just had the first cup of coffee I think that I probably had, I would have to say, probably about 35, 40 years or so. I would think, let's see, 35 years. Full cup. Not that I haven't had maybe a dabble here and there, but, you know, we've got this bulletproof coffee. And so I should, yesterday I had a little sample. Tom made a little sample of the Tiger Butter Brew. That's the bulletproof coffee, and it tasted great. You should really try it at home. In fact, you know, what you want to do today is you'll want to listen from 12 to 1 to Chef Nico's show, and call in, talk to Chef Nico. He'll tell you the exact way to make your Tiger Butter Brew. But it's possible that I'll be bouncing off the walls in here. But you can always give me a call. Call me down at 877-927-6648. You know, if we take a quick look, we had the unemployment numbers come out at 8:30 this morning. Not so hot, meaning that there were about 115,000 non-farm payroll number jobs that were added versus approximately 160 or so that the street was looking for. Now, of course, if you like math, if you like funny math, I'm going to show you real math when we take a look at Fibonacci expansion and contraction numbers. But if you like funny math, the unemployment percentage ticked down from 8.2% to 8.1%. But the market right now, not really buying it. You've got the Dow futures off about 60 points. ES Mini trading out at 1380 right now, 1380 even. That's down about 6 points. You've got the NASDAQ futures off 11. They're trading out at 2680. The Russell 2000 down at 800.6. That's off about 3.6. And when you take a look at where the ES Mini, and I've got the 30-minute ES Mini chart up on my screen here. And what you'll see, and I'll go ahead and, in fact, you can watch us on TigerTV. If you're listening on the radio, you know, thanks so much for doing that. You can always catch the archive of this show on TigerTV. Go to Channel 9. And then the Money Master show that Tom and I do, you can always catch the archive of those charts of that show on Channel 10. Now, what you're really looking at is an A to B equals CD down. And markets are always making patterns. And the A to B equals CD pattern is absolutely one of the best patterns out there. It's one that I believe that you can understand no matter what level of charting skill that you're coming from. It's the one that I recommend most. You know, it's like, and it's truly learning the ABCs of charting. And in this case here, the A point on our ABC down started at the high that came in, happened to come in on May 1st, when you got up to the area of about 1,411.75. This is on the S&P futures contract. Now, the B point on this that we're taking a look at is when the market moved down into the 11 o'clock time frame on the 2nd of May. Got down to a price point of 1389.25. C point made a 0.618 retracement. That's what this number is right here. Maybe you can see it on Tiger TV. But, you know, you want to understand your 618, your 0.786 retracements, and also your 0.382 because they're going to help you to understand the actual energy of the A to B equals CD. Now, when you do a 0.618 retracement, oftentimes, 60% of the time, what you're going to do is a one-to-one move. But the real key is understanding how you're coming into that D point and what the candle, my candle, what it looks like as you're coming into that D point. Well, a one-to-one A to B equals CD takes you to 1380.27. You know, if you were listening to Tom's show last night, I was fortunate enough and grateful to be able to sit in with Tom for a couple of hours. And at that stage, what we saw taking place in the market was an A to B equals CD down. What I told folks, as I said, the ES Mini, the S&P futures are going to trade to 1380. And at that stage, because we were on at about, obviously the 4 to 6 time frame, what it really looked like is more likely it was going to head to 1374. Well, I can tell you that if the 1380 does not hold, and 1380 is going to have some pretty decent support from a real number standpoint, not from a what we'll call funny numbers standpoint. And the reason that I say that is because what we're looking at, we're also looking at a 1.618 expansion of a significant swing. And I say a significant swing because the last time, Tom and I were coming on the show doing the Money Masters at 10 o'clock on the 1st of May. And that's where we saw just simply a huge candle, huge up spike, some volume behind it. And the low on that candle was really the session before. The low of that was really right at 10 o'clock when you were at 1391.25. That low right there would have been the breakout area of that move. And that breakout area actually held coming into the time frame here of May 2nd. That held, but it gave way, and it gave way yesterday at about 2 o'clock in the afternoon. That's when it gave way. That area did not hold any longer. But what you're seeing is if you go from the low of that May 1st area, which is 1391 in a quarter, all the way up to the high that was put in at noon at 1411.75, if you just took the math of that and you multiplied that times 1.618, and then what you would do, you'd get a number and you would subtract it from the high. You would subtract it from the high, again being 1411.75. What that would do is that would send you right down to that 1380 area. Well, that's a 1.618 expansion. That's a pretty good expansion. You would usually get a reversal, especially off of a significant swing point area. If that doesn't hold, and at this stage here, the way that we came down to the way that the market came down after it churned, of course, while my good friend Mike Comey was churning some of the butter in that Tiger butter brew, the market was also churning those numbers, was eating them up, and it was saying, it didn't really buy it. It didn't like the numbers. You had some pretty good volume between 8 and 8:30 on the S&P futures contract. You did about 177,000 contracts there. So you've got some real significant volume now coming into that area. You're holding it right now. If this area does hold, folks, where the ES Mini is going to trade down to is the 1375 area. I believe 1375, that's going to be a 1 to 1.272 A to B equals CD, and I believe that's an area where you're looking for it to hold. If it doesn't hold there, folks, then all bets are off. Well, not really. We can go take a look at where it's likely going to go to. Now, at that area, at the 1374, this is why I really want you to understand the Fibonacci numbers, and it's why I also want you to be able to come from a place of strength, just simply to be able to interpret the market. Even if you're in the market, whether you're long, whether you're short the market, you really want to be able to step back. You want to be able to clear your head. You want to be able to come from a place of strength. And a place of strength means always just simply stepping back, looking at the chart, redrawing the chart, leaving your thought process, not your thought process, but leaving your opinion maybe at the door. Just take a look at the chart, see what it shows you. Just simply use those beautiful numbers. Well, if you go from the low that was put in here, and we'll call this a major crossroad, a major swing point, that's really at the 10 o'clock time frame when the market was at 1355. That was on April the 23rd, and you go all the way up to the high that was put in on May the 1st, on May Day. What you'll see, if you've got really good eyes, well, you'll see is at 1376, that's the price point where you would have Suite 618. And so if you're going to be in Clearwater, you'd come visit us here at the 601 Cleveland Street. You'd come up to Suite 618, and that area there also should act as a support area. So at support, you've got the 1 to 1.272 A to B equals C to D. You also have a 0.618 retracement. If that area does not hold, folks, and when I say hold, what you're looking for is some type of bullish candle formation at one of these levels here, then what you'll see in the marketplace today, well, perhaps today, you'll see it move down into the 1366 area. Why do I say that? Because that's the 1 to 1.618 A to B equals CD, and that is also the 0.786 area. So it's very helpful to understand these numbers, to be able to draw these patterns. And, I can also teach you how to do that. You can attend my one-day online Master Trader course. It's going to be on May the 18th. So it's actually 2 weeks from today. It's going to be a full-day session. In fact, 2 weeks from today, I won't be able to do the live show here. Tom's going to have a long day because he'll have to do the 4 hours because he'll also have to do, maybe we can get some help. Maybe we can go to the dugout and get some help from Basil or Larry, or, of course, Larry, he'd be having to get up early. Of course, he's up early. He's up like all of us here. He needs the Tiger butter brew for sure, because I'm thinking that I might not be able to get some sleep now that I've had a full cup of coffee until this coming Sunday. But we'll see how that works. So that is on the ES Mini. That's what's going on out there, and it's why I want you to be able to, understand the Fibonacci numbers. So if we go take a look and see what else is going on around the world. Now, this is on the 30-minute chart. Let's go take a look at the other index futures out there. Let's just take a look at the daily. And so in the 4 quadrants here, we've got the NASDAQ in the lower left, Dow up in the upper right, the Russell in the lower left, and the ES Mini in the upper right. So if we take a look at the Russell, because the Russell 2000, folks, that's that's where we've seen some weakness. You take a look at the Russell 2000 or the NASDAQ futures. What you're seeing here, this is the daily chart now. So we'll just take a look at the daily chart, and you can see it's trading down into that 0.618 area. So if this area doesn't hold, we can just simply take our Fibonacci ruler, go from the swing point low on April the 23rd all the way up to the high that was put in on May the 1st. And what you'd be looking at is you'd be looking for the Russell to trade down to that 0.786 area. That would be in the 791 price point. If we take a look at, let's go take a look at the NASDAQ futures, see what the NASDAQ daily chart is doing out here. We'll pull that up on the screen. NASDAQ daily chart here right now trading at about 58%. So where's NASDAQ futures really headed to? They're certainly headed to Sweet 618. And Sweet 618 is actually at 2673. If that area does not hold, go ahead and you'd be looking at the 0.786 area. That would be the 2652 price point. But that's a pretty good way down. That would be 30 points down. When we get back, we're going to go take with my coffee this morning, what I also should have been doing is I should have been having an Einstein bagel, because apparently a lot of you folks have been. They're up 28% in the pre-market. Unless they're being taken over, I don't think that's the case. We'll go take a look at them and everything else that's popping and dropping. We get right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It is Fabulous Friday, and on Fabulous Friday, this week we were talking, or I was speaking to you a bunch about fear and the importance of really, when you have fear overcome you, that you want to be able to change your state, in a snap of a finger, in a heartbeat, as I like to say, and you want to be able to do that so that you can come from a place of strength. And, I had a number of emails. You're always welcome to send me an email. I love getting emails, steve@tfnn.com. I almost always get back to folks within 24 hours. And, so one of the emails asked, well, what else can you do to maybe help change your focus? Because it really is all about focus. So what is it that you can do to change your focus, if you don't really have a place of strength to come from? And I thought, that was a pretty good question. Because not everybody, has my Lanai Rockin' Mind or something like that, in their life. And so what I was, I thought about it for a good portion of the evening while I was watching a hockey game, and I think it was a hockey game that went into overtime again last night. Of course, I was snoring through that one. And so I was thinking about, what else is it that you could actually do? So here's what I came up with, and I've talked about this on occasion, the importance of being grateful. And, what gratitude, in my opinion, you should always live with an attitude of gratitude. And I know, folks, the way that I am right here at TFN is the way that I am if you were to meet and greet me on the street or just simply walk into the office. There's no show, and it's like the markets. There's always there's two sides of the trade. There's a bullish and a bearish side of the trade. So when you come to a decision, you can always look at the positive or the negative. Doesn't matter what gets thrown into your life. And I can promise you the universe is always going to test you to just see how badly you want the things that you want in your life. And so if you really want them badly, you'll find a way to have a positive outlook. That means that you'll have an attitude of gratitude. So if you find that fear, if you're in a position where all of a sudden fear, and you're looking at maybe what automatically you might think is the worst possible outcome, here's what I want you to do. I want you to have a little gratitude list, because when you're grateful, just list down, maybe the top 10 things. You don't need a whole lot. Just maybe list the top 10 things that you're grateful for in your life. Because when you are grateful, folks, what's going to happen is fear disappears. Why is that? Because you're going to change your focus. What you focus on, you feel. And, what you feel all of a sudden becomes real to you. And so what I want you to do is I want you to, that's going to be the easiest way. So if you can't take yourself and maybe touch some part of your body to be able to move yourself into a sense of strength, what you can do is and you've got an iPhone or an iPad or an Android device, or I don't care what kind of phone you have, almost every single phone out there, because your cell phones are usually near your hip, everyone has a little memo pad on it. And so what I want you to do is I want you to write down the 10 things, you can write down more if you want, have a gratitude list. Because when you're grateful, fear will disappear, but not only will fear disappear, abundance is what appears there, folks. So that's how I suggest that when fear comes over you, just simply go to that list, because you can read through those items, those 10 items. You can do it in 4 or 5 seconds, and that ought to change what it is that you're focused on. So let's go take a look at what's popping and what's dropping in the pre-market. I did mention Bagel, B-A-G-L. That was Einstein Bagels. Actually, the last trade fired off last evening, but when it did fire off, it was at 18.09. I see some trades at 18.30, 18.32. They closed out at 14.04. What is with these restaurant stocks out there? You've got Dolby, DLB Laboratories. They're going to be on, I believe it was Microsoft 8. And in the pre-market, they were up to 45.50. Right now, they just fired off a trade at 45.50. They closed out at $20.91. So that is one heck of a nice move. You've got Sierra Wireless, SWR is their ticker symbol. They're trading at 801. That can't be the right one because 704 is what they closed at, so they're up about 15% in the pre-market. You got Cincinnati Bell, CBB. They are trading out right now at $3.99. They closed at $3.56. That's up 12%. You got Spreadtrum. There we go. Spreadtrum. SPRD. Communications, they closed at $13.43. They're trading out at $15.44 right now. Leapfrog Enterprises, LF. Don't know what they do, but kind of a cool name. They're trading out at $10 even. They closed out at $8.93 last night. That is what's moving to the upside. Let's go take a look and see what is moving to the downside percentage-wise. Let's see who the percentage leader of the downside. Bebe. B-E-B-E. How do you pronounce that, guys? That is a clothing line, I believe, and they are trading out right now at $6.88. They must not be selling enough clothing. I know I've seen, I think it's mostly a woman's clothing line, and I guess, of course, it should be. Maybe it's even a baby clothing line. There we go. Let's see, educational toys. Oh, Leapfrog is educational toys. Anyways, they're down 14% this morning. You got Sapient Corp, S-A-P-E. They're out 15%. Columbia Labs, they're down. China Information. Let's see, what else? Caribou Coffee. What's with the coffee companies? They're down 7% this morning. They don't have the Tiger Brew. We'll be right back. We'll go see how these markets are going to drop and whether they're going to pop, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. In fact, speaking of races, don't we have a big race coming up this weekend? I believe that we do. We need to hear from our man Phil just to find out who we should bet on in the Kentucky Derby. But in the Derby of the markets here, you've got the Dow down 56 points right now, followed behind by the S&P. They're down 7.5 points. You got the composite down 25. Small caps off 5.25. Percentage-wise, you've got the composite leading the charge on the way down with the small caps right behind them, followed by S&P and then the Dow. If we take a look at what is popping in the marketplace and what is dropping, you got LinkedIn. They came out with some nice numbers last night. They're up about 6% right now. They're up $6 and change. You've got Dolby Laboratories. We mentioned that as we took a look at some of the stocks that were popping in the pre-market. They're up 17%. They're up $6.47. You've got Fluor, F-L-U-O-R, Corp, F-L-R is the ticker symbol. They're up nice this morning. They're up about 6%. Digital Globe, DGI, they are up 17% in the market. Spectrum, they are up 16%. Vernetics Holdings, VHC, they're up 7%. You've got, let's see, other than the power shares, you've got Herbalife. That's interesting. They're up 2%. They were being crushed yesterday, so don't get in front of that one. HLF is the ticker symbol on that. To the downside, you've got Body Central, see if it's Central. I'd have to go look it up here. Let me just see what they actually do. BODY is the ticker symbol. Dollar-wise, they are the leader in the clubhouse. Body Central Corp operates a specialty retailer of young women's apparel and accessories in the South, Mid-Atlantic, and Midwest regions of the United States. Well, let's see. What did they come out with here? They come out with some earnings. Let's see, a downgrade. Where's their, okay, so their net revenue was up 11% to $82.7 million. Their earnings per share was 36 versus 34. So it must be the outlook that folks don't like. They're down a whopping 43%. So we'll go take a look at that. That's healthy. Just down $12. You've got Apple down $6 right now. So Apple filling the gap. You've got Invensys, INVN, one of the IBD 50 stocks. They're off about 21% this morning. So they must not have released very good numbers here. Let's see if I can see what they've got going on. No, I don't really see that here. But they're getting attacked. You got Rovi Corp, R-O-V-I. They are in the digital age. They're down about 11% in the market right now. So let's go take a look at what we've got going on here in the SPYs. I've got the SPY 5-minute chart up here on the screen. You can see how it gapped down this morning. You're trading a little bit lower right now. We've been open. The market has been open for, looks like, about 7 minutes here. So let's go try to see on just simply a 5-minute chart, where is it that the SPYs might be headed to. The SPYs right now, they're traded below where they gapped up here coming into the April 25th time frame. And if we just simply take a look volume-wise, I'd have to really, let me just change this to a 10-minute chart. Let's change this to a 10-minute chart. Might be a little bit easier here for you folks to follow along on Tiger TV. There we go, a little bit easier. So we're going to go over to where it gapped up and take a look at the volume that we have there. That would be really the swing point that we're looking at. and that was at 9:40, so the first 10 minutes, April 25th. That's the line that I'm going to draw, and what you're looking at there, you're looking at a low of 138.57. If we go take a look at the volume that was associated with that, just to take a look at how the volume in the first 5 minutes today, you're looking at volume somewhere right around, looks like about 6.2 million shares, and you gap down this morning, and you have gapped down with some more volume. So that says you're going to move down to the next swing point, and that would make a lot of sense. So let's go take a look at also some retracements. Let's go take a look at a retracement coming off of the time frame from April 23rd, and we take a look at the low out there. You're down in the 135.94-ish range all the way up to the high on May the 1st, and you can see the 0.618, which is what it's going to attack right now, or shortly, is going to be the 138.13. It looks like it wants to head down to 137.16. If we take a look at just simply, we talk about A, B, C, D patterns that are out there. Let's take a look at the A, B, C, D pattern. That's coming off of the high at 12 noon on May the 1st. B point that we would use here, we're going to use the easiest one. That was the one put in at 10:40 in the morning on May the 2nd. Looks like the retracement is probably about a 0.382 retracement. Looks like you could probably use as the swing point high. Let's see, at about 240, you were high at 140.46. Let me see if that is the actual high at 140.46. So that looks like a good one. That is at about 240 on May the 2nd. So the 1-to-1 A to B equals CD. You see how you've gapped down into it, folks, and these work on all time frames. Doesn't matter. You've gapped down into that. That says that you want lower price as you're coming into the D point. So it doesn't matter whether you're using a 10-minute chart, whether you're using a 30-minute chart, or a daily chart. So important in order to become a master of that C to D leg, just to understand what's happening when you get around that D point. So this is saying that it wants to do probably a 1 to 1.618 A to B equals C to D, which would be looking in that 137 range. At 137, you've also got that 0.786 retracement area. That is on the SPYs. Let's go take a look at the let's go look at the small caps now, the IWM. Let's do the same thing with the small caps. I'm going to go ahead and expand that up to the 10-minute chart as well. As opposed to the 5-minute, it'll be a little bit easier to follow along if you're playing on the game show at home. So if we take a look at the small caps out here, let me get rid of some of the other stuff that's out there. And when we take a look at the small caps, let's go ahead and first draw the AB equals CD pattern. We're going to take a look at the high out here at 12 noon on May the 1st. Our B point, pretty easily distinguished. You can see where you had a significant market change, a change in direction. That was coming down in the 1050 time frame on May the 2nd. You made a low out there of 80.78. Market retraces back up. In fact, let's go measure that retracement just to see what Fibonacci number we're looking at. So we're going to go from that high on May the 1st. We're going to go all the way down to the low on May the 2nd. And what you can see, almost a 0.618. Looks like about a 50% retracement there. I'm going to get rid of that so you don't have to pay attention. So 1-to-1, A to B equals CD on the small caps takes you into 79.37. Now let's go take a look at the retracement from the low to the high, where we take a look at the major intersection out there. Well, that major intersection came in on April 23rd at about 10 o'clock in the morning. Let's go take a look at the swing point. Low that we're looking at there is about 78.39. I'm not going to be exact here. It's just so I can just keep this moving along for everybody. But you'll get the idea. And so if we take a look at the all the way up to the swing point high around May 1st, what you will see at that 0.786 area is also going to be the 1-to-1 A to B equals CD. So it looks to me you've got some volume on the small caps. You had good volume off of that first 10-minute session. We'll see what the volume is coming into the 9:50 time frame. But what this is suggesting to me is that really, instead of stopping at that 0.786 area, it's going to go all the way down and test the lows from April the 23rd. That would take in the small caps into the 78.31 area. Let's go take a look and see what we've got going on in the diamonds. That's the DIA. We're going to switch that over also to a 10-minute chart. Then we might go take a look at King Dollar. In fact, let me just look on my screen here, see what King Dollar is doing, because there's been some divergence there. And we do see divergence still in the marketplace. The King is taking Friday off, folks. King is down almost 12 ticks right now. So we'll take a look at that chart. There is some divergence in the marketplace. But first, what we're going to do, we're going to draw that A to B equals CD pattern. That A point out here is on May the 1st, the high out there at 11:55. Well, that is the 5-minute chart. Let's change this here. Let's be consistent. Let's go change that to the 10-minute chart. There we go. Well, I thought that's what we were doing. Come on. What do we have here? Okay, we seem to have a technical glitch, but not any glitch that I can't overcome. Because I'm just simply grateful to be here with you today. So see, when you get some negativity that pops into your life, all you got to do is just say, not me. All right, so apparently what my system wants me to do is go take a look at King Dollar. So let's go over to the King Dollar chart. Now, you got the King, as what the King has done here, folks, is the King has made a 0.382 retracement. Let me just erase this. I'll show you what it is that we're going to do. Let's erase some of these lines out here, and that way it makes it a little bit easier. I'm going to try to erase these lines if I can get my system. There we go. So what we're going to take a look at is the King Dollar. We're going to go to the swing point high that's out here on April the 16th. The King was at $80, got up to a high of $80.35. So we're going to use that as our point, our swing point that we're going to use to draw a retracement. So we're going to go from that high all the way down to the low that was put in on May 1st, the low out there. And when we take a look at it, what you'll see is what the King has really done, it is holding that 0.382 retracement. You would think just the opposite. You would think with the Dow being off 90, with the markets under pressure this morning, that you would see a large move in the King. And we haven't seen that. So there is some absolute divergence that is out there. The King actually is really trying to make an A to B equals CD down. Each time it tries to do that, though, it's running into resistance. If I try to shorten up this chart here, maybe if we may pull it back a little bit here on the dollar chart, see if I can do that. Okay, so what we're going to do, folks, is I'm going to come off of the lows here. Let me get rid of this retracement, because you know that's only about a 0.382 retracement. And if you take a look at the King and come back to the low that was put in August of 2011, King Dollar was trading down to a low of 73.57. And all I'm doing here, folks, is just drawing a simple trend line. You can do this, I'm sure, on any of the charting tools that you've got on your system. And so we're just simply going to go from the low there. We're not trying to draw a channel. We're just simply trying to draw a trend line. We're not trying to. You can't try to do anything in life. You either do it or you don't do it. And so we're doing it here. So when we're taking a look at the trend line that we've got out here. Oh, I see we've got a caller. We'll go to the caller in just a second. We're taking a look at the trend line that we've got out here. Your next point is going to be that October 27th area. And you can see how King Dollar has held that trend line. But there still is a couple of AB equals CD patterns that are out there. The smaller ABCD pattern would start from the swing point on March the 15th. You would come down to a low of April the 3rd, and then you would come all the way back up to the swing point high, same April the 5th. And the 1-to-1 would take you to 77.89. Makes a lot of sense to me that the King Dollar, because you got King Dollar trading down into the bullish engulfing candle from April the 3rd, and it just simply can't get above that area. It's a big bullish engulfing candle. It has rejected the bullish engulfing candle from February 29th, leap day year, if you will. And so let's go to Charlie in Framingham, Massachusetts. Charlie, thanks for calling. Thanks for holding.
Absolutely, Steve. How you doing?
I'm doing great. Yourself?
Great.
Got a good got a big week. Do you like the Kentucky Derby?
No, I'm afraid not.
No. You can't help me pick a horse?
Well, if I threw a dart at it, that would be my help.
I like the dart method. When I was a young kid, a wee little lad, I got a tip on a horse, and we knew what numbers. And I think it was a harness racing track that we went to in Detroit. And I somehow must have been dyslexic because I reversed the numbers. And so imagine this. And actually, the tip came in, and I thought I was holding a winning ticket until I went to cash it in. They said, "No, my friend, you got the right horses. They're just in the wrong order." So I actually like your dartboard method. So might have to try that. You wanted to take a look at the SCO. Tell me what you're doing or thinking of doing.
Well, I got in several days ago, and like at 35.32.
Okay.
And she popped today. I'm just wondering, is this going to be able to get up to above 40? Does it look like it's got the capability to get up there?
Well, what I'll do here is, first what I'm going to do is switch over to the actual oil contract. We're going to take a look at the continuous contract right now. So one of the things that I would be looking for today is I would be, in my opinion, oil wants to pull back to the $99 level. And so right now you're trading at $100 in a little bit of change. $100.33. And what it's doing right now is it is taking on the swing point from April the 10th. Now, let me just check to see here if that happens to be a bullish engulfing candle. So you closed out on April the 10th at 100.92. You open up the next day at 100. Okay, so it's not. So right now you're trading below the swing point from April 10th. That swing point low is 100.68. You want to see it close today below 100.68 on the oil contract. And what the oil is doing right now, if we just take a look at ABCDs, because I've been waiting for oil to pull back into that $99 area. But now that we've broken that swing point, what we can do is we can draw an AB equals CD. So we come off of the high that was put in on March the 1st when oil was trading at 110.55. Have you seen much relief at the pumps in Massachusetts?
A little bit.
Just a little?
Yeah.
Yeah.
Yeah, well, several cents.
Okay. So what actually, the way when you make an AB equals CD patterns, it's really key to understand how you come off of the C point. Now, we know that the CFTC, and we'll talk about it when Tom and I do the Money Master show, has made some changes out there. So some of the sell-off that we're seeing is a result of that. And, everything needs to be put in place by Monday. So, but still, irrespective of that information, you still have to pay attention to how you come off the C point. In this case here, you're coming off with major conviction, enough conviction for it to say that oil wants to trade down into the $90 level, not 93. But if you stay on the line, we'll go back, take a look at SCO, maybe help you out with that trade and something to look at there. All right, Charlie?
Yes, sir.
Okay, we'll be right back, folks. Dow is down 83, S&P's off 11. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And, this is full moon, sort of full moon Friday. It's going to be full moon Friday, full moon Monday. Just make sure at about 10:30 p.m. on Saturday evening, if you've got some blue skies or they're not going to be blue skies. How about just simply clear skies? Go out on the horizon, take a look at the full moon. In fact, go out there, take some cool pictures, and email them to me. I can maybe go ahead and pop them up on the screen come Monday morning. You're going to have not just a full moon, you're going to have a super full moon. And let's go back to Charlie in Massachusetts, who was in the SCO. He is short the oil sector. He has gotten a nice trade. He got in probably somewhere in the $34, $33 area, trading out right now at $37.15. So, what you've got happening here today, you've had an event over the last 2 days where you've got the members of the CFTC probably unwinding some of their positions here, and so you've got some benefit of that. I would rather see King Dollar making a move higher, and you don't see that happening. King Dollar's down 11 ticks. So right now this simply becomes a money management, a reward to risk aspect. So, just the normal A to B equals CD on this would take you up into the $39 area. What I would be doing is I would be looking at adjusting my stop, and let the market take you out. And that's how I would handle it. So what you want to understand on the SCO, the average true range on the SCO is 83 cents. Well, you're well above that for the day, because you closed out yesterday at 35.52. You're at 37.22 today. So what I would consider doing is I would consider, the high so far on SCO is $37.06. I would probably put a stop 83 cents underneath the high, which would take you into the 36.50 area. And at 36.50, you would actually be underneath your B point, the swing point from April the 10th. And you'd probably still have a pretty nice profit. I don't think that that's what's going to happen today, but I would be just simply adjusting my stop and let the market take you out. And you can use that as kind of a trailing method. Just simply, use the average true range as one way to manage your trade. What you can also do by understanding the average true range on the SCO is take a look at what's the target that you're gunning for. And so as you get up to that area, if what you're doing is maybe just gunning for another 40 or 50 cents, but the average true range is much more than that, you might at that stage say, you've had a good trade, and you might go ahead and, take it off the table.
Okay, excellent. I appreciate that, Steve.
Yeah, no problem. It's just that, this is so event-driven with regard to what's going on in the commodity marketplace right now. I'd like to see King Dollar going along with it, and there's just some divergence out there. All righty?
Gotcha. Thanks so much.
You bet. Thanks for listening. Thanks for calling, and have a great weekend. So, folks, right now you've got the Dow is off 87 points. You've got the S&P off about 11.5, composite off 34. So percentage-wise, leading the charge on the way down is the NDX. What's that all about? Well, it could be about Apple. Let's see what Apple is doing out here. You've got Apple down $8.70. Let's just pull that chart up here real quick, see if Apple is filling the gap and what kind of volume. Apple has not had, I guess I have to put the right ticker symbol up out there in order to have that pull up here on my screen. There we go. So you got Apple trading out at 572, 570. let's see, the low so far, 572.11. The high of the gap is 567.69. Look for Apple to fill that gap today. Now, the volume at that gap, at that candle, you had 38 million shares. Yesterday, when you were coming down, you had 13 million shares. Today, so far, you're at 3.5. So you got volume in Apple today, folks. Thanks for listening. And, folks, make sure that you are grateful. Come up with a gratitude list, because fear will disappear the next time it comes over and it tries to attack you. And when fear disappears, abundance appears, folks. So have a great weekend. I look forward to seeing you on Monday. Take care, folks.